Good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this market wrap-up is for the evening of Tuesday, the 30th of May, 2023. Now, before I get any further, our Memorial Day sale ends tomorrow. So if you want to take advantage, you move your cursor right to the top here. You will see an icon appear. You click on the icon, it takes you to everything you have to do. You get one of my free courses, your choice, what you want to do. You can give it away. You can use it yourself. You decide when you want to take it. And you're paying for one of my research packages or more. You can buy morning subscriber video for futures, the morning Spider ETF, or you can buy the package of the futures with my written commentaries. All qualify for this. Got that? So you get to do it. Some people will say, well, Ira, I want to buy the futures and the Spider. You get two courses. It's two purchases. That's how I'm going to look at it. Okay? You have 1 day left to do it. All righty. I hope you take care of it. So let's talk about the market. Now we're into the nitty-gritty where you're already hearing the first rumbles. Everybody's getting to see the bill that came out between President Biden and Speaker of the House, McCarthy. We'll hear the people that don't like anything. They were sold down the road. McCarthy's no good. I'm going to vote to have him ousted as Speaker. Well, it takes more than your vote. You have the right in the House. Any one of the congressmen can call for that, and then it comes up, and then there's a procedure that they have to go through. So that was what Mr. McCarthy gave up, and I'm sure that the far right wants to do that to him, and they may. I don't know that they'll be able, with the procedures, to get that done just before the final votes come in on the bill. Will the bill stay in its current form? That's the big question. Because between now and probably sometime early tomorrow night, that's when I'm assuming the vote will happen, there's going to be a lot of wrangling. There's going to be talk. Well, you'll hear people say they're not going to give in on this. No, they'll put together whatever. There'll be some negotiations, potentially, not necessarily. And it's horse trading back and forth, or you accept it. And we'll see what happens. Obviously, what nobody wants is default. Let's understand that. Neither party wants that. But they can go right up to the 12th hour by saying, you make these changes and take them over to the Senate and see what happens. Because that's where most of the changes most likely will come from, will be the House. Doesn't mean the Senate can't also do some and send them the other way. So a lot of wrangling. I know you think you'll wake up in the morning and you have a deal. That's not going to be the case, in my opinion. I don't see any way that happens. So what did the markets do? Well, the easiest thing today was to see gasoline prices slip. While they're up tonight, they gave up a chunk of money. Just take a look at where they went from 253, 53 all the way down. So you were down, up, you're every which way in this. And why? Because the driving season is kicked off, but the big usage that weekend is done. People are either traveling home, they are home, and now we get accelerated driving for the summer, but not the way you typically get on Memorial Day. The next event is July 4th. As for energy prices, this is the battle now. You are now at the 31st for all purposes in trade date. The 4th is the OPEC meeting. What is OPEC going to do? If you get my full research, today I gave you a phenomenal story about Russian production. It's long, it's phenomenal, it's got facts galore. They are producing like there's no tomorrow. And what's OPEC going to do about it becomes the problem. There's OPEC, there's OPEC plus. Are they going to cut their production to help Russia, who's just going to keep producing more and flooding it? It's a never-ending part because Russia will just keep producing because of the war. They cannot rein Russia in. I know you might think I'm out of my mind saying it. No chance. Putin has one goal. He needs money. He's stuck with wheat. I don't know if you've taken a look how much wheat they have on hand. It's a monstrous number. He's not got the monies that he wants to have, so he's got to sell things. And that's why wheat's under pressure, oil's under pressure. You don't have to believe me. Read the reports, all right? Sorry about that. Didn't mean for that to happen. Okay. So we can see that the stock market's sort of mixed. You knew the NASDAQ was going to be the strength of the market, but you're starting to see wobbles in the S&P, in the Dow. The gold market under some pressure along with the silver market. The copper market, a lot of pressure. Why is copper under so much pressure? Because their big customer, half the world consumption, isn't buying a lot of it. And that is China. Big problems there. As you can see, as we take a look at the dollar, down a little bit, but not collapsing. Why? Because we don't know that we have a debt deal done. And then I got to give you something else. Tomorrow morning, you're going to get the JOLTS report. What if we see that the jobs turnover and the amount of jobs out there goes up, not down? I would assume it goes down. I would think people have hired their summer needs, especially in the service industry. What if it goes up? In other words, more jobs are wanted. People are putting out more ads. They need more help. That's the first part. Get through the debt deal and you get into, I think it's Friday's jobs report. I think that seals the fate, in my mind, as to what the Fed's going to do. If they can get the debt ceiling bill done and passed, it opens the Fed up to take a hard look at the next mandate it has. What is going on with inflation and what's that jobs market look like? All right, so we come over to the gold, and when we look at a weekly chart of closes, a while back I pointed out to you that I thought if the market broke down, it might go over here to the 18-week average of closes, just closing prices, and that's where the market went. You tell me it didn't go there. It went there. That's your battleground right now. You had a big outside day to the upside in gold today. Why? Because it's trying to culminate that the break is over and that if the bill gets passed, interest rates come down, the dollar falls, and a headwind is gone, and we still have the inflation problem. And that's the benefactor to gold. The negative is, what if the bill gets delayed? Then you're too soon in the game. It's not a trend change. It's a first sign that the market wants to bottom out here. You have a higher high, lower low. That's all it is. Where are you fighting? The first challenge of the 100-day average of closes. If the market succeeds in getting through this, the resistance will be wherever, in my opinion at least, the 18-day average of closes is. And the support's also the lower Bollinger Band. Only 5% of the time you close above and stay above the upper part of the band to the lower. Yes, it narrows in and it expands out, but the rules stay the same. Until you lose this embedded reading, with the close over 21, I think the pros are selling up here, looking to see if the market will drop back down. If it does, I think they cover at the lower band. If you lose the embedded reading, I think they're out of the market. When you look at June gold, and I'm going to be leaving June, I want you to be aware, June is the last time you're going to see it. I'm moving to the August gold as of tomorrow. But just wanted to finish up with you, show where everything is. In the July silver, you have an embedded reading. Tells me that each rally in this market, same thing as gold, get sold, same identical reasons until you get the red number over 21. Then I think the shorts do their covering. Copper market, you lost the embedded reading, and you lost it a little bit ago. So if you and I come together here and we take a look at when, it was right here on Friday the 26th. Okay? If it's lost often, that means that before prices go under this low, the market attempts to get back to the closest main moving average, which is the 18. I'd say that it's trying to do what I said, so we'll see what happens. It is certainly a spot where if you were next to me, you'd get that elbow in the side and say, cover your shorts. We'll take another look. In the platinum, first challenge of the 100-day average. I hate selling under that number. You hear me say it all the time. You know, I'm redoing my courses. Every couple of years, I sit back and I like to redo them. So the full charting course, you're looking at the version that we're giving away now with this. It's going to be redone, and it'll have more things in it. Nobody's got it yet, but it'll be interesting. I am going to still keep, though, the outside days and the enhanced Bollinger Bands away from the full course. They're too important just by themselves. You can see where the market is right through here, fighting its battle. But you're embedded or not? Well, you need 3 days under. You can't count Wednesday. We don't know where Wednesday's going to close, but we can say Tuesday. So both numbers were under 20. Both numbers were under 20 on Friday. What about Thursday? Both numbers under 20. So you have an embedded reading, which tells me the pros are selling the rallies. They'll be out if they get the red line over 21, and they're looking for the lower Bollinger Band. In the palladium, it's time for me to get rid of the June palladium too. I wouldn't be surprised if it makes its run to the lower band and finishes itself up there. And in the dollar, we had an outside day to the downside. Now, on this break, the pros, in my opinion, will buy now. And the reason is until the red line's under 79. The problem you have is the dollar may just hurt you whenever they're going to call for the vote on the floor of the House of Representatives. I think that's where you have to really focus. They're the ones that either pass or don't pass. I think the Senate will be the easier passage. And that's what you want to see. It may not even be a vote tomorrow. So you got to be careful, because every time it looks like it's going to wobble and nothing happened, dollar probably gets a risk bid. Be careful on it. And that's what I think's happening here. That's what the traders will probably do. The moment they see there's passage, I expect the market to let go. And I wouldn't be surprised that we immediately make a run for the 18-day average of closes. In the meantime, you can be in a lot of pain because you don't get a debt ceiling. What tells you can't get back up there? So you put it together, be careful. Can I be any simpler? I'm happy we're not getting an extension yet. Do you think it's off the table? Absolutely not. Why? Because if they can't pass the bill, they're not going to go to default. That is not going to happen. Everybody will agree to an extension at the end if they have to. They don't want to be in the history books that they're the ones that put America into default. So this can play out. Be careful. These things happen. I've seen this all my life. Nothing changes. The players change, not the game. I'm Ira Epstein. I'll see you first thing in the morning. Take care.